ask you, if I may, Professor Pissarides, what you make of this deal. Good morning.
Good morning. Well, first of all, I should say that's an excellent report from Stephanie Flanders. That's precisely what my concern is, that the Eurozone, the Eurogroup rather, has dealt with Cyprus as a small country with no contagion, but then forgetting that the principles which they followed to resolve this crisis will have implications for the rest of the Eurozone. For example, number one, banks in trouble are bailed out by their depositors. This is not what happens normally. It happened in the 1930s, and we set up deposit insurance after that. When the Royal Bank of Scotland, for example, in Britain, was in deep trouble, no depositor lost any money at all. Instead of management got fired, the government stepped in and helped them out. Now, you might say, well, the Cyprus government doesn't have the money. Well, fair enough, but that's why Cyprus joined the Eurozone in the first place, and that's why we're heading for a banking union, to pool all the risks so that we can make sure that the banking system in Europe works well. Well, in this case, we have a German finance minister who comes and tells us, Cypriots, I don't like your economic model. I don't like the basis of your economic development of the last 40 years, since 1976 to be precisely. You have to change it. And the way I'm going to make you change it is to bankrupt your two main banks and several of your other financial institutions on the way, and then you sort out the mess afterwards.
Well, that's the thing, isn't it, Richard Corbett? That's the message it's sending, isn't it? If Germany doesn't like it, then they make threats. They blackmail you. They say, we'll bankrupt you.
Well, I would take that view with a pinch of salt. After all, what is happening here? Cyprus has reached a stage where its debts are so huge it cannot finance itself on the international markets. Fellow Eurozone countries, not just Germany, all of them are chipping in for a bailout loan to lend it a large amount of money. It comes to more than half of Cypriot GDP, to give Cyprus time to turn the corner and so on. Now, the original proposal, which the Cypriot government had actually supported, and was to tax all bank accounts in Cyprus, however small. Most of the rest of Europe thought, hang on, that's a bit socially unfair. But it was the Cypriot government that insisted on that. That idea has now been dropped. All accounts of under 100,000 euros are now protected.
Yeah, but that doesn't mean there isn't going to be
on the original deal that the Cypriot government wanted.
Indeed, but there isn't still going to be contagion, does it? Because if you've got 100,000, and these days 85,000 sterling isn't a huge amount of money. If you've got that amount of money in the banks, you're going to be asking questions about its security.
Yes, well, that level coincides with the common European 100,000 limits in the event of a bank going bankrupt. That 100,000 is protected for everybody. It's a good idea to protect the bank accounts for smaller account holders, but as Stephanie Flanders was saying just now, the idea of protecting infinite amounts with no limit for very large account holders is quite a different kettle of fish. Should you do that? And should you rely on taxpayers of other countries to help you do that? And the answer would normally be no.
And wouldn't that have to be the answer, Professor Pissarides? Because where would it end if the answer were not no?
Well, it was a no with every other country that asked for help. Greece has a completely corrupt, non-functioning economy. And the European Union has spent 140 billion euro to rescue it. Cyprus has a functioning economy, has a functioning accounting system, public system. We inherited it from the British, and it's still very much as it was then. Everything is functioning well, except that when Greece was in trouble, the big Cypriot banks stepped in to help out Greece. They bought a lot of Greek bonds. The Greek haircut came, and they couldn't afford to bail in those bonds. Now, the obvious thing is that the various funds in Europe, the EFSF or the ESM, is going to comes and helps a financial institution. We tried its best to help another Eurozone country in trouble, and the troubles of that country brought it into this stage. Now, instead, the Cypriot banks and the Cypriot economy is treated in a far worse way. I mean, all that was needed, all that would be raised from this deposit tax will be something like 8 or 9 billion. Greece got 140 billion, for heaven's sakes.
But
how could they say that it's too much money?
Yeah, but the bigger question, though, if I may, the bigger question is what effect this is going to have on depositors, on people with money in Europe who are worried about the future of the banks, and in the longer run, and the two obviously go together, the future, the stability of the euro. Do you believe that the euro is viable?
Well, precisely. What I believe is that it's looking less viable because of the way the decision was reached. The Eurogroup kept changing its mind during the last 2 weeks. 2 weeks ago, all the talk was about Russians and money laundering and how we should tax the Russians because of this and that. Yesterday, the Cypriot government went and proposed some kind of levy on other banks as well and on others. And the Eurogroup insisted, no, you shouldn't touch any of those because they haven't done anything wrong. Now, what interfered in those 2 weeks about relations with Russia, I don't know, but it shows that the way that the euro is being supported in these economic meetings has more to do with politics and with relations with big countries like Russia and what German objectives are within the Eurozone, because for better or worse, Germany was acting alone over this. There was no French president anywhere to be seen, no Italian leaders, the big countries. And then Cyprus has to take it. But one final thing, if I were anywhere in Europe now, and especially in Spain or Italy, if I had more than 100,000 euro, I would quickly withdraw the rest and go and open another account in another bank.
Well, that's it, isn't it, Richard Corbett, in the end? That's the practicality of it. And the other practicality of it is that we've been here so many times now, and surely Europe cannot go on like this, staggering from one crisis to another. We think we're making a bit of progress, and then bang, there's another one, and then there's another one. It's all up for the euro, isn't it?
Well, there are some countries in the Eurozone with excessive debts. There are some countries outside the Eurozone with excessive debts who've also received international loans. And conversely, some in and some out that don't have this problem. Yes, the other Eurozone countries are giving a very large loan to Cyprus. But also remember, there are some very special features of Cyprus that are not the same as the others.
Well, the trouble is there always are,
but
in every one of these crises.
Absolutely. And that's what you need to look at without these sweeping generalizations. Cyprus has a banking sector nearly 8 times the size of its economy. That's why it's not going to be a precedent for anywhere else. There are some very special situations with its offshore banking model, which attracts accounts from foreigners in Russia and elsewhere, which are very peculiar to Cyprus. It is not a precedent.
We were told there were special situations in Greece and in Ireland and in Portugal and in Spain and in Italy. And they're all different, which is why a lot of people would say the euro is not viable because...
sweeping generalisations are just not on, and say, it's all down to the euro. It's not all down to the euro. There are countries in the euro with problems. There are countries outside the euro with problems. So there are countries inside the euro that are doing relatively well. There are countries outside the euro that are doing very well.
Very quick thought, Professor Pissarides, if you would.
I'm sorry, very quick thought. I just cannot take this. I mean, there's nowhere else. Luxembourg has a bigger financial sector, so is Luxembourg going to be next online?
All right, we'll end it.
Other small countries. Malta is building up its financial sector. It's becoming as big as Cyprus, or not bigger, because the Russians are moving there now. Is Malta going to be next in line? How could anyone directly involved with this say that each country has different features? I mean, the feature of Cyprus that is different, and the reason that it got this is that it's small and it doesn't have big clout anywhere. Small members of the Eurozone, beware.
Well, there we are. Thank you very much for all of you. Stephanie Flanders, Christoforos Pissarides and Richard Corbett. Thanks all.